So, in this video, I want to discuss Indraprastha Medical Corporation. So, let us look at the comparative analysis, technical analysis, and fundamental analysis of this stock. We will also look at market conditions and then we will take a decision what to do about the stock. Okay, so I click here, click consolidated. Okay, first let's do comparative analysis. Okay, so relative strength 92, fantastic. Accumulation distribution rating, institutional demand is A plus, fantastic. Group rank is 18. So all the 3 points are in our favor. So comparatively, the stock is very strong. I don't even need to look at whether the industry is improving since past 6 months because comes in the top 20, it comes in the top 40. So comparatively, it is strong. What about technicals? Now, technicals, if you see, the base is not completed properly. So if you go here, see there are only 3 points in the base. So if I draw the base here, see blue, green, red, the 50 days above the 150 and the 150 days above the 200. Okay, that is fine. But what about the number of points in the base? This is 1, 2, 3. We need minimum 4 points in the base like this. Okay. So technically it is weak. We need minimum 10 candles in the base, minimum 4 points in the base, and the blue, green, red. But in this case, we have only 3 points in the base. So it is technically weak. What about the base count? If I click here, you see the dotted line here. If I click here, it is base number 5. Now, in a weak market condition, base 4 and base 5 has got an 80% chance of failure. If you read William O'Neill's book, How to Make Money in Stocks, this concept is clearly explained. Base 4 and base 5 generally have an 80% chance of failure because they are late stage base within the stage 2 uptrend. And this is especially true in a weak market condition. Okay, if the market is in a confirmed uptrend, we can still take that additional risk. But in a weak market condition, uh, the chance of failure is very high. Plus, it is technically weak. There is a blue dot, so the relative strength line is at 52 week high. That is fine, but technically it is weak. Late stage, number of points in the base are only 3, not convincing at all. Okay, so comparatively strong, technically weak. What about the fundamentals? See, fundamentals declining since the sales declining in the last 3 consecutive quarters. What about EPS? EPS declining in the last 3 consecutive quarters. This number should be minimum 40%. This number should be minimum 25%, right? Return on equity looks fine. The growth in annual EPS looks fine. 6, 9, 13. So it is increasing. But my concern is decelerating sales growth for the last 3 quarters, decelerating earnings growth for the last 3 quarters, and EPS minimum criteria does not meet our threshold. Sales latest quarter minimum criteria does not meet our threshold. We want sales latest quarter to be minimum 25%. We want uh, EPS latest quarter growth to be minimum 40%. So this number should be minimum 40%. This number should be minimum 25%. Both conditions are not satisfied. If this is not 25, then there should be accelerating sales growth. If this is not 40, then there should be accelerating EPS growth for the last 3 quarters. All 4 conditions are not satisfied. So not interested. Plus annual EPS growth rate, this number should be minimum 25% or preferably 25%. Earnings stability is fine. This number should be less than 25. Okay, the lesser, the better. That is fine. PE ratio should be closer to the higher end of the 5-year PE range. Again, that is a problem. The cash flow should be at least 20% higher than the latest EPS, which I think is fine. The latest EPS is here, cash flow is here. I think it is more than 20%. But you see, comparatively strong, technically weak, fundamentally weak, and then you look at market conditions. Here you have market conditions. See, the market is still in a rally attempt. So if I go to the chart of Nifty, let me show you the chart of Nifty so that you will understand why we are rejecting the stock. So you go to the chart of Nifty, which is a representation of the market. The chances that this low will be taken out are very high. Plus, there is a falling window in the Nifty itself. The blue, green, red status, the Nifty has lost. So the Nifty is probably getting into a downtrend. We don't know. As per Market Smith, it is still trying to attempt a rally as long as it remains above this low. Okay. So we are waiting for the market to get into a confirmed uptrend. That might take some time. We don't know. We cannot do forecasting prediction. That is not our job. Suddenly, if the market starts rising from here, nobody can anticipate that happening. Okay. You cannot predict the future. So market conditions weak, fundamentals weak, technicals very weak, only comparatives are strong. Would you buy the stock in such a case? Absolutely not. You reject the stock. It doesn't matter what happens to the stock price after this. If I reject the stock here, maybe in 6 months I would see the price go from 500 to 1,000 rupees, right? The price could double in the next 6 months, but I am not concerned about the future. I want to see currently what do I see. The four types of analysis that I do is very important: comparative, technical, fundamental, and market analysis. Okay. Now, when I make a video, I explain to you in detail what I am looking for. I show you the chart, I take you to Market Smith, things like that. I draw the points and things like that. But in reality, when I am looking at a stock, all of this analysis happens in less than 10 seconds. It is supposed to happen in less than 10 seconds because every week you are going to look at 500 stocks, right? For every stock that you buy, you should be at least rejecting 100 stocks. Remember, for every stock that you buy, you should be rejecting at least 100 stocks. So your skill of rejection is more important than your skill of selection. There will come a stock where you absolutely cannot reject because it is showing tremendous amount of strength. Moreover, we did not check the industry positioning. No need to change, by the way. No need to check, by the way, but I will show you. Let's go to medical hospitals, go to stocks. That's the industry. Sort by market capitalization. Where is Indraprastha here? Okay, it doesn't even come in the top 10. Is it even in the top 20? Yeah, I think it's in the top 15 or 20. So it's not even a market leader as per market capitalization. Okay. By the way, that's not the definition of a market leader. A market leader is a stock which is a leader in the industry group in terms of sales growth, EPS growth, ROE, margin, and relative strength. Let me repeat that. The definition of a leader within an industry group is a stock which is a leader in terms of sales growth, EPS growth, ROE, margin, and relative strength. This is exactly what is given in William O'Neill's book, How to Make Money in Stocks. Okay. You can refer chapter number 7. I think the second page, chapter number 7, second page, you will find that statement. There is a definition of a market leader. So this stock does not fit that definition. So another very good reason to reject the stock. It doesn't matter whether the stock doubles from here or goes down 50% from here. Based on what I see, based on my current analysis, I am going to reject the stock. Okay. Thank you so much. By the way, today is 31st of December as I record this video. It is 8:37 p.m. I told you earlier that I'm not going to make videos, but I'm a trader. Inside me, there is a very passionate trader. I like to make videos. I like to create content. I like to discuss stocks. So there is something inside me which told me that Rohit, let's start the recording and let's publish a video. Okay. I am not someone where, I have to publish the video. Okay. Otherwise, I feel restless if I don't do that. But, anyways, that's a little chat I wanted to have with you. But, anyways, Indraprastha Medical Corporation, I am rejecting because of the reasons that I told you. Take care. Happy New Year. In a few hours, there will be Happy New Year celebrations. Happy New Year to all of you and your family.